Hey guys, this is Toby Mathis, and today we're going to talk about great passive income opportunities for 2023. Now, when I say passive income opportunities, I'm going to use the way that I define it, because to the IRS, you have active income, which gets hit with ordinary income rates and Social Security. Then you have passive income, which is rents or businesses in which you do not materially participate. And then you have portfolio income, which is your capital gains, your dividends, your interest, and your royalties. And I'm just going to break it down and say I'm going to focus on rents, dividends. Those are our two key ones. I do like short-term capital gains when you're selling options on your portfolio, but that's about it. I'm not going to get into all the others. And I'm going to focus like a laser beam on what's actually working in 2023. Because what have we had? We had a huge downturn in the market last year. We've had interest rates going up, which means affordability is difficult. We have housing starts going way down, and we have inventory at about half of normal. And believe it or not, people are going to be doomsdaying, the market's crashing, What we have is a huge amount of demand in real estate. In fact, by all estimates, it's more than 5 million units underbuilt for real estate, and housing starts are going down. So what does that mean? It means that people need a place to live. And all the people that are out there screaming about the real estate market getting crashed, I hear you. Yes, the Fed's raising interest rates. Yes, mortgages are more expensive. Yeah, I get it. It's affordability is at crisis levels. But those people still need a place to live. And there's lots of solutions that can be offered. And the areas that I look at, like anything that's low-cost building, manufactured housing, shared housing pops up on the radar screen. Bread and butter, just single-family residences are great. Everybody's going into multifamily. So you have these big, huge BlackRock, Blackstones, syndications, all these major investors, all these private equity are going in and doing these big multifamily, which makes it really difficult to enter. But that means that there's plenty of opportunities around those ridges for folks like us. Maybe we do it on the small ball. Maybe we're doing 8 plexes and 12 plexes instead of trying to do 150 plexes, right? We're looking for bread and butter housing. Maybe it's just single family housing between 90,000 and 120,000. And before somebody says, oh, you can't buy those, we do it every day, every day, all year long. And we've been doing it for years. And yes, it's still available. You just have to know where to look. And these are cash flow properties. So if I was going to focus in on one specific area in real estate, it would be making sure that I understand how single family residences, manufactured housing, bread and butter, cash flow properties fits in. And if you don't have the money, then look at doing things like wholesaling those properties to others. Learn your tax liens and foreclosures, how you can go in and perhaps get some of these properties through some other means as opposed to just going onto the MLS and trying to buy them. There's lots of creative ways to get into real estate, and I would encourage you to start being a student. And if you need a place to go, infinityinvesting.com is a great place to go do that. The other area is dividend-producing stocks. We now have, I think on last count, as of last week, it was 67 companies that qualified as a dividend aristocrat. And if you don't know what a dividend aristocrat is, it means companies that are valued at greater than $1 billion that have been increasing their dividends year after year. And dividends is the profit they're paying to their shareholders, the amount that actually goes out to its shareholders. The dividends they've been paying out have been increasing every year, year after year, for at least 25 years. And I didn't misstate that. That means that you're getting a raise every year for 25 consecutive years with no sign of slowing down. A lot of these companies like Coca-Cola, Procter & Gamble, 3M, they're over 50 years, some over 60 years. And people say, well, but this is different. No, this market is just like all the other markets, cyclical. Interest rates, they're going to jack it up, and what is it going to do? It's going to cause inflation to go down. It's going to put pressure on housing. It's going to do exactly what it's designed to do, which is reduce some of that demand. And then once they go too far, then they're going to start lowering interest rates and the whole process recycles, right? there's never a situation where you're sitting here saying, I should time the market, because you're not going to win that. Every study I've ever shown, and I saw a study of 76 20-year stretches. It does not happen where you got that crystal ball and you're going to win that game. What wins that game is slow and steady investing over a long period of time. Slow and steady. Every year or every month, they're almost identical, but it's putting money into those markets, and specifically, I'd be looking at those dividend aristocrats this year and focusing on companies that have a huge value. You know, you look at your dividend yield, which is how much it's paying you. Maybe it's paying you 4% dividend. Yes, just for owning it. But you have to look at it and say, but that dividend goes up every year. Where are you going to be in 10 years? Well, compared to what you paid for, it might be paying 7, 8% a year. Maybe more, maybe less, but it's going to be paying out when you buy a good company. Inflation, the best way it was ever explained to me was actually Warren Buffett, who said inflation is gravity. It's pushing down on these companies. Strong companies don't care. They're like, go ahead and throw it on there. It's like a backpack with 20 pounds and you're really strong. And hey, put 50 pounds in there and you're really strong. You're not going to care. But if you're weak, that 20 pounds is causing you to top over. And then they put 50 pounds in it, you fall right on over. That's most of those growth companies, right? They're just, they need that debt, they're getting squished. But the strong companies that have been there for year after year, for decades, that's what you invest in right now. And they're a great deal because they're all on sale, because the market's been having this downward pressure, and the Fed's going to keep doing what it does until it stops, right? And then nobody knows when the Fed's going to stop. There's predictions, but it will stop, and then they will start reduction. All you can do is continue to be investing in those things for the long haul with a long-term mentality that, boy, I'm just going to sit here and churn. So in 2023, what would I be focusing on? I'd be focusing on your bread and butter real estate. Tell your brother and everybody else who's yelling at you to, oh, real estate's going to crash, just to shut up. No offense, but go away. If you have a bunch of property and you're making millions of dollars a year in real estate, I'll listen to you. Otherwise, stop, please. You're just vocalizing opinions. Right? Do what you understand, what you know is best, and that's great real estate. Cash flow real estate never gets old, and cash flow stock market investing never gets old. I call it being a stock market landlord. Not only can you get those dividends, but if you want to spend a little bit of time and you learn how to do a covered call, you'll be a stock market landlord. You'll make money twice on the same stock. And you'll just keep doing it. And you'll be like, gosh, this is easy. Why isn't everybody doing it? Because not everybody has common sense. You do. And I would encourage you for 2023 to jump into those two areas, your bread and butter real estate and your bread and butter stock investments. And if you want to know more, by all means, check out my YouTube channel or go to infinityinvesting.com.